Good afternoon, everyone, and welcome. My name is Christopher Long. I'm president of the Center for Public Policy Innovation. I'm delighted to welcome you to today's program, What's Next for the IRS, the Future of U.S. Tax Administration. CPPI is a nonprofit educational think tank whose mission is to assist government and Congress in addressing the many challenging issues brought on by the rapid advancement of information technology. Today, we will explore how the IRS mission has evolved from taxpayer service and compliance to include other responsibilities like the disbursement of benefit payments and tax credits. We'll discuss issues related to the IRS technology modernization effort, the balance between compliance and privacy, and the proper role of the IRS in the taxpayer filing and compliance experience. And this discussion will be enhanced by sharing recent reports, op-eds, and survey results from our panelists. I'm honored to have former Senator Bob Kerrey moderate a live panel discussion with Tony Scott, the former Chief Information Officer of the U.S. federal government, Dr. Pinar Wilber, the Chief Economist for the American Council of Capital Formation, Patrick Hedger, Vice President of Policy at the Taxpayers Protection Alliance, and Cori Kramer, Executive Director of Center Forward. Today, please use the Q&A function to submit your questions anytime during the program, and we'll do our best to get to as many of those during the panel discussion. We're also sending you a link through the chat that will take you to the event landing page with the agenda, speaker bios, and an exhibit hall with links to our materials. And one area of interest today will be around Ready Return versus Direct File, two programs, controversial programs being suggested for use by the IRS. Ready Return would be the IRS would predetermine your taxes and send you a notice asking you to acknowledge that that's correct. And then the direct file would be like what we're used to, where you go online and fill out your own taxes. But before we begin, we're delighted to have Senator Rob Portman make some introductory remarks. Senator Portman has been a leader and a champion for IRS reform. He was first elected in 2010 and currently serves as the ranking member of the Homeland Security and Governmental Affairs Committee. And he's a member of the Finance Committee, the Foreign Relations, and the Joint Economic Committees. Mr. Portman has a long history of public service, having previously served in the U.S. House of Representatives as U.S. Trade Representative and as Director of the Office of Management and Budget. So now we're delighted to have a word from Senator Portman.
Hi, I'm U.S. Senator Rob Portman. Thanks to the Center for Public Policy Innovation for inviting me to kick off this critical discussion on the future of U.S. tax administration and how we can work at the federal level to equip the IRS with the resources it needs to fulfill its vital function in our nation's government. I felt strongly about this issue because my constituents in Ohio benefit when they know they're sending their hard-earned tax dollars to a modernized agency, one that's able to provide quality customer service to taxpayers and ensure that our tax laws are enforced so that everyone pays all the taxes they owe. Americans interact with the IRS more than any other federal agency, making quality customer service essential. I've been proud to support efforts to improve the IRS, going back to the reforms we passed in 1998 that improved the organizational structure of the agency and bolstered taxpayer rights. That came out of our work we did on the IRS Reform Commission, which was a bipartisan commission leading to that legislation. And in 2019, Congress worked in a bipartisan fashion to pass further landmark reforms. Included in that law were provisions I fought for, such as establishing an independent office of appeals and strengthening taxpayers' rights to appeal their cases. But there's still more work for us to do. The IRS continues to struggle with outdated hardware and software, a lack of funding, and a shortage of workers. Among the 33,378 full-time personnel lost between 2010 and 2020, more than 13,000 were enforcement personnel. This lack of personnel has made it easier for tax dodgers to avoid paying their fair share, creating a shortfall that adds to our record national debt. The most recent IRS tax gap report was released in 2019 and covered tax years 2011 through 2013. For those years, the IRS reported an average annual net tax cap of about $440 billion, reduced to $380 billion after enforcement efforts are about 14% of total liability. That means $381 billion was owed to the federal government but not collected by the IRS. The good news is there continues to be bipartisan support for providing the right kind of funding for the IRS to improve its operations and to serve the American people more effectively, with both President Trump and President Biden supporting at times increases of funding for the agency. I believe providing smart, targeted funding will help create more fairness and allow us to narrow the tax gap, recouping this cost of the increased funding in the long run. At the same time, I believe it is essential that any efforts to reform the IRS come with strict guardrails that ensure that taxpayers' right to privacy is not violated thanks to overenthusiastic enforcement. It should not be too intrusive. Earlier this year, as part of the bipartisan infrastructure negotiations I helped to lead, we proposed investing $40 billion in reforms that I believe would have found that right balance. These reforms would have modernized the IRS, improved the technology at the IRS, improved customer service, taxpayer service, and ensured that the agency is adequately staffed. Importantly, this would have come with safeguards for taxpayers to prevent potential violations of privacy and security breaches that led to some of the recent data leaks and cyber attacks that have compromised the personal information of many taxpayers. While these reforms were not ultimately included, I believe they can serve as a model for bipartisan common sense IRS reforms that will improve this essential agency and ensure our tax enforcement is fair. As President Reagan said in a speech to an Atlanta area high school back in 1985, quote, "We want to see that everyone pays their fair share and no one gets a free ride. It's good for society when we know, all of us, that no one is manipulating the system to their advantage," end quote. I think President Reagan was right. I believe Congress can help improve the IRS to make that a reality, and I'll continue working to find bipartisan solutions to make it happen. Hope today's panel discussion is informative and helps move the conversation forward on this critical topic. Thanks for having me.
Thank you, Senator Portman. And on behalf of CPPI, thanks for your long career of public service and your dedication to IRS reform and tax policy. And now it's my pleasure to introduce Senator Bob Kerrey to moderate our live panel and introduce our guests. Senator Kerry has had a distinguished career of public service himself as a Navy SEAL, a war hero during Vietnam, Governor of Nebraska, United States Senator from Nebraska, U.S. presidential candidate. And after his government service, Mr. Kerry continued to serve as president of the New School, a university founded on strong democratic ideals and daring educational practices. And he currently serves as the chairman of the Minerva Institute for Research and Scholarship, where he advocates for broad reform in higher education. Senator Kerry, it's an honor to have you with us today. I look forward to the discussion, and now invite all the other panelists to turn your cameras on, and I'll turn things over to you.
Well, thank you very much, Chris. Let me thank Senator Portman. It's unfortunate that his proposals were not included in the infrastructure bill, because I do think he was right on target of what needed to occur. It might be, for those of you who are staffers for people on the Hill, it might be useful to understand how the 98 IRS Reform Commission was put together. There were two members in the Senate, myself and Senator Grassley, both of us on the Finance Committee. Senator Grassley, obviously a Republican, I'm a Democrat. In the House, we identified two individuals who were on the Ways and Means, Senator Portman, who was a member of the House at the time, and Ben Cardin, who now is a senator and a member of the House at the time. And it helped. It helped to have members, a Republican and a Democrat member of the Finance and Ways and Means Committee, because obviously that's any recommendations we made, that it was going to have to go through those two committees. We held hearings. The hearings, I think, contributed to the eventual legislative success. It wasn't immediately apparent we were going to get a signature from the president, but we finally got that accomplished as well. That's a whole different and interesting story, not relevant to this panel today. Among the most important things about the Internal Revenue Service, it is a voluntary system. That is to say, we taxpayers declare what our income is, and it's enormously important for that voluntary system that the citizens themselves, the taxpayers, have confidence in the collection is going to be done in a fair and an impartial fashion. So what Senator Portman was talking about, to modernize the technology, to make sure we have the resources to actually do the job, especially since it's likely, no matter what happens in Washington, the tax code is going to get modified late in the legislative session. You're going to have the IRS scrambling to try to notify taxpayers what the new code provides. So I'd like to, Tony, go to you first, because you've spent a fair amount of time looking at both the tax code as well as the IRS, how to make it possible to make it simpler for the taxpayer. So could you talk to us a little bit about how simplifying the tax code is not as simple as it looks from a distance?
I'd be delighted to. And, I served in the Obama administration for the last 2 years as federal CIO in OMB. So got to see, the inner workings of government up pretty close. And when we started looking at this white paper, it was in response to several op-eds and suggestions that had been made that said, let's make filing tax returns easier. And a lot of these articles, looked at other countries, what had been done in California with Ready Return and so on, and suggested that all of those might be a good model for the U.S. federal government to follow. And so we looked at it more closely, and rather than just a paper full of ideas, we looked at some facts behind how successful different programs had been, if they were successful, why they worked, or if they weren't, why they didn't. And then we looked at the costs of doing some of the things that have been proposed. So what I'd like to outline is just some of the findings of that report. As was mentioned early on, Ready Return basically assumes that the government already has all of the financial information it needs, and using modern technology could pre-prepare a tax return for an individual, and would then send that tax return to the individual for verification and any modification if there were errors. E-file is really, a version of what some of us already do, which is electronically file our tax return. And some of the data in that model, the government already has and can use to verify data that we're reporting. But in some cases, in the US at least, there's other data that the government wouldn't have. And that's really the crux of the problem, I think, when we talk about some of these high-level suggestions, which is how much information the government already has or could have, and that balance with privacy and so on that others here will talk about. Fundamentally, though, underneath all of that, no matter what the ideas are, I think we have to acknowledge that we have a very complicated tax code. And automating it in any form, whether it's taxpayers trying to do it themselves or having the government do it, is complicated by the fact that we have this very complicated tax code. A fundamental principle of IT and of digitization is garbage in or complexity in equals complexity out and cost and complications. And there's just no avoiding that. It's kind of one of the first principles. And I think, our research shows that it really, if you want to do this the right way, you got to simplify the tax code in a way that makes it much easier. And I think almost none of the suggestions that we've seen in terms of op-eds, really make that as the first principle. Then finally, we looked at the costs of doing this, and the priorities of the IRS. And I just want to mention a few of the facts, from our white paper, but there have been a number of bills passed, has been mentioned. There was the Simpler Tax Filing Act. There was the Tax Filing Simplification Act, various modernization programs that kicked off in as recently as 2019. The estimates were it was going to cost 2.3 billion to 2.7 billion, just to do fundamental modernization of the underlying infrastructure that the IRS uses. As was mentioned, a lot of this runs on old, antiquated technology. And while there has been some progress on modernization, I think 7 out of the 10 ideas that were a part of that, those modernization efforts are behind. They're at least 30% over budget. And so we're a long way from sort of finally fixing the core infrastructure under which all of this, the IRS operates. And, you know, as an IT guy and as a former federal CIO and as a CIO at the Walt Disney Company and Microsoft and so on, I know that you can't build on a creaky foundation. And some of these modernization efforts, while they're going to take a while, need consistent funding and need to be done before I would even think about creating some of these more complicated reforms in terms of adding to the IRS mission or adding to the IRS burden. Building on a creaky foundation is just fundamentally a bad idea, in my opinion. So I'll kind of stop there, but I think that's the bottom line of the report, which is, you know, get these other modernization things in the foundation fixed, and after that is done, then you might have a possibility to think about some of these more complex ideas. But it also would require tax simplification. Back to you, Bob.
Thank you very much, Tony. I'm sure there'll be questions from the audience coming forward. Cori, you're on mute. I got to get you to unmute. There you go, because I'm going to turn to you next. The Center for organization, you're the executive director. So that's some really interesting polling of taxpayers to get their opinion. It seems to be there's good news and bad news in there for the IRS. Could you tell us what you discovered in that polling data?
Absolutely, Senator. Thank you so much. Pleased to be here today. Thanks to CPPI and my co-panelists. Yes, you're right. We did do some investigative polling. You know, with the IRS being established in the 1860s, their role has grown to not just processing returns, but conducting criminal investigations, overseeing tax-exempt organizations, their retirement plans. And as one of the largest organizations of the federal government, with over 74,000 employees, Senator Ford really thought it was worth taking a look at how Americans engaged with and perceived the agency. So in late August, we undertook some research to better understand this by partnering with 2 polling firms bipartisanly, and we conducted a 1,000-person national poll. So when COVID hit, the IRS, among all the rest of us, quickly found itself taking on different things. You know, they engaged in distribution of 3 different rounds of economic impact payments and COVID-related stimulus checks to eligible taxpayers. I think that's something we can all admit that we did not see coming. In the polling, the agency received really high marks and praise from Americans for their efforts in implementing this COVID and pandemic added work. Net positive on many fronts, you know, plus 47 on distributing stimulus payment and checks, plus 41 on getting tax refunds out quickly, plus 32 on providing access to taxpayers on their return information, and plus 28 on processing tax returns quickly. But conversely, we found a net negative on some fronts, negative 14 on determining which taxpayers should be audited, negative 15 on providing quality customer service and answering taxpayer questions, and negative 41 on catching wealthy individuals who may cheat on their taxes. We found, unfortunately, that a majority of Americans still do not trust the IRS to look out for their best interests when trying to get the lowest tax bill and the best refund. And this was particularly evident when we posed questions surrounding the creation of a return-free, ready return tax system, as Todd was discussing. You know, so we explained to respondents, because a lot of them weren't aware of what it was. We explained to respondents that there's a proposal to allow the IRS to prepare your return for you. And in order to provide this free service, the IRS would create a new computer system, and use the data it collects about you to prepare your tax return. Then taxpayers would have the option to accept the return the IRS prepared for them, make changes to it, or reject it and prepare their own alternate return. Voters were initially divided on this system, but intensity-wise, one of the things you're looking for in polling is how strongly do people feel about the issue one way or the other in an intense way. The intensity level was significantly stronger with people who oppose the ready return system, with 31% of respondents strongly opposing. And when you're looking at a 5-point scale of strongly opposed, neutral, support, and strongly support, 31% is very significant. We then tested some arguments for and against the proposal. And 31% found that the fact that it was an optional program very convincing. But on the other side, 47% found it very convincing that it presented a serious conflict of interest for the IRS to be both the tax preparer and the collector. I really think the skeptical nature of many Americans plays a significant factor here, believing that the IRS will focus more on maximizing the government's revenue over their own personal refund. So Senator, that's sort of I'll leave it there for now with just that overview, and I'm happy to dive a little bit deeper as we continue our discussion, but I'll hand it back to you for now.
Okay, thank you very much, Cori. Pinar, you're the chief economist for the what do you call it, the Center for Capital Formation, American Council for Capital Formation, and you've got some really interesting writing, for me at least, on what the IRS is doing now. Are they prepared to do the sorts of things that are going to be necessary in the new economy, especially the gig economy? Can you talk a little bit about what you think the IRS should be doing and should not be doing to be able to perform its functions?
Sure. Thank you, Senator, and thank you, Center for Public Policy Innovation, for pulling this event together. So basically, to talk about the future of the tax administration, I think it's important to look at the current system and ask two major questions, because it's good to go back to the basics. The first question is the basic structure of the current system or tax administration is appropriate and functionally efficient? And the second is it flexible enough to evolve with the changing economics? To answer the first question, I have to go back to Tony's point, and it's the building block. It's the tax laws or the tax code. And it's not a well-kept secret that the tax code is very complicated. And there's a reason for that. The tax code is not just there to collect revenue, but it's also there to achieve certain social and economic policy goals. So that means there's a lot of tax incentives and other things that are weaved into the tax code. So under this system, as Senator, you said, we have a voluntary tax compliance system where we divide the duties. Basically, the taxpayer fills out and files their own taxes, sometimes with the help of a tax preparer, and the tax administration on the side, on the other side, are responsible for basically three important functions: is the tax services, taxpayer services to help them out pre-filing part, tax return processing, collection, and enforcement. So when you have something this complicated, obviously tax filing is a very individual affair. I say that because many of the provisions are based on the taxpayer characteristics. So it turns into a not one size fits all, it's making an individual affair. So when you consider the current tax system or current tax code, I think the tax administration and the current tax system is the appropriate one to use. I know over the years there were calls in order to involve tax administration on the tax filing side. But unfortunately, if our ground rules is the current tax code, I don't think that it's a very appropriate one. So the second part of that question, is it functioning efficiently? My answer is no. And in I think it was a May 2021 paper, we looked at these three basic functions of IRS, whether they were doing their core functions effectively. And we have seen that, there are significant problems. And I want to commend IRS for the work that they have done during the COVID, the height of the COVID, with the stimulus payments and all those things. However, those additional jobs or additional workload probably increased the appearance of the problems within the system. We highlight a lot of issues with, with all of these three functions, but just to give you an example, for example, in 2020, IRS was only able to answer 20% of the phone calls on the taxpayer side. On the collection and enforcement, when we look at it between 2010 and 2018, there was a 46% decrease of examination of the individual tax returns. We're talking about on the infrastructure side where, it's very important for the tax return processing. I think it's called individual master file, and Tony can correct me. It's a very important infrastructure. And I know IRS is working in updating, but to replace the system, GAO said that in a recent report, we still need 10 years. But economy is moving very quickly and it's changing. So if you are taking 10 years to do that, obviously there are issues that are coming behind and you have to handle those too, which means, the administration or, the IRS has problems, but again, it's not related with the system, but it's related with the funding issues or the resource constraints. So that brings up to so my answer for the first question is yes, structurally, I think the current system is the most appropriate, but it needs funding. And that's great that we have this additional funding coming. But the second question is the system also flexible enough to handle the changing economies? And there are two important issues that are emerging that are on the radar of the countries. The first one is the globalization of the income. And all the countries are obviously following that issue. And in recent years, there were a multitude of international agreements to share financial information between the countries. That means that on the tax administration side, you have an increased load of data coming from overseas. So how are you going to handle that data? It's very important to somehow use that in a meaningful way. As Tony said, garbage in, garbage out. So you have to find a meaningful way of integrating that data into your current system. And the second issue is rising of the gig economy. So majority of the people who are talking about the ready returns or pre-filled tax returns, they always talk about the need for a simpler tax system. But rise of the gig economy is another issue that's basically making everything more individualized. With the advent of the technology, it's becoming an important part for many of the individuals. On another paper that we have prepared in September, we looked at certain data. So we don't have a set definition for gig economy, but currently, according to public and private estimates, we have 25 to 30% of the workforce involved with the gig economy. And majority of these people are actually compensating their income with the gig economy. They have a couple data points. For example, 47 of these gig workers have full-time jobs and 22% have part-time jobs. So they're basically supplementing their income. Which means there is more information that IRS might not have on the side of the taxpayers. A recent, I think, tax reform on American Rescue Plan Act, for example, decreased the threshold for the tax reporting. So that means another increase in the data flow coming through the ways of the IRS. All of these tells me that I think the basic structure is good, but the tax code is making tax filing more individualized because it's basically increasing the need for personal knowledge. So it will be very inefficient, in my opinion, to try to switch the tax filing also to the government who might not have that information with all the other host of issues. I think, I could delve deeper if you have any other questions, but.
I think that's a good beginning. So Patrick Hedger, you get to go last. You can be our cleanup. You're spent a lot of time looking at this from the standpoint of protecting taxpayer rights. Can you talk to us a little bit about your view of the IRS and some of the proposals to reform it?
Yeah, sure thing. Thank you so much, Senator. Good afternoon, everyone. And first and foremost, thank you to the Center for Public Policy Innovation for hosting this panel of distinguished guests and me. So my name is Patrick Hedger, and I'm Vice President of Policy at the Taxpayers Protection Alliance. We're a nonprofit, nonpartisan taxpayer and consumer watchdog organization based in Washington, D.C. Today, I just want to supplement the incredible insights of my fellow panelists with some observations and concerns about the IRS. The job of the IRS is absolutely critical, and it's extremely sensitive. I mean, it's a powerful law enforcement agency, and I think that law enforcement agency aspect gets lost in a lot of these conversations. The IRS has its own army of armed agents and an arsenal of firearms. And that also happens to be keeping tabs on you and every other American every single year. I mean, as Senator Portman said, We really don't see this kind of relationship with the government in any other area. I know this line is probably really cliche, but it's too applicable here. With great power comes great responsibility. So before we have discussions about expanding the size and scope of the IRS, we need to take stock of how the agency is performing in its core functions, the things we're already expecting it to do. And so far, the evidence, especially lately, has been a little alarming. There are a few proposals that we're talking about here with regards to the IRS that we're seeing in the various bills being floated these days. One is about increasing the reporting requirements around bank transactions. Another is having the IRS get further involved in the process of preparing people's taxes, as we've heard, ranging from the direct e-file system to a ready return. Either way, we're really talking about the IRS supplanting the role of the private sector firms such as H&R Block or TurboTax or any other kind of private accountant that does tax filing services. So regardless of which proposal we're talking about the IRS collecting, processing, and securing more data in systems than it does today. So how does the IRS perform on privacy and security with the systems it already has? And the answer is not great. For example, an audit released just this past September by the Treasury Inspector General found that the IRS had not been, quote, using approved sanitation product to overwrite sensitive taxpayer data on laptop and desktop hard disks. So we're talking about the equipment that the IRS has been used and is replacing and throwing out. They're not doing a good job wiping the hard drives of sensitive taxpayer information. The audit also found that the tax collecting agency is not annually testing its sanitation equipment and procedures. The report states, quote, that applying effective sanitation techniques and tracking hardware asset inventory are critical aspects to ensure that sensitive data are protected against unauthorized disclosure. If an unauthorized disclosure of tax or personally identifiable information occurred, it could result in substantial harm, embarrassment, and loss of public confidence in the IRS. An unauthorized disclosure could also harm an individual, end quote. But not all disclosures that we've seen at the IRS are accidental. Just recently, we saw that troves of sensitive taxpayer information were handed over to ProPublica. Now, at Taxpayers Protection Alliance, we are really strong defenders of whistleblowers, but so far, ProPublica has not published any evidence of wrongdoing. Sensitive taxpayer information was leaked to make political points about tax policy, not demonstrate that anyone was actually breaking the law, besides the people or person at the IRS who leaked these documents. I mean, this is entirely unacceptable, and it's hard to see how this doesn't also create a loss in public confidence, as the Treasury IG would put it. This all goes without mentioning the well-documented scandal in the middle of the 2010s of the IRS targeting conservative nonprofit organizations for greater scrutiny. In short, the IRS is still in a bit of a public confidence deficit. And finally, there are some of the obvious public choice problems that come with the IRS getting more involved in the tax preparation of average middle class and working class Americans, the people that don't have all the lawyers and accountants. Could we count on the IRS to truly advocate for Americans to get every dollar they're owed? I fear Americans looking to save money by using an IRS designed system would run a substantial risk of leaving money on the table that they're owed. Private accountants and tax preparation services benefit when you get more money back. And it's hard to see how that would apply to the IRS, or that they would jump through the similar hoops that these private services do to ensure that you get every dollar back that you're owed. There's also existing issues with IRS enforcement that are of great concern. Some data suggests that the IRS is disproportionately targeting low-income Americans for audits. A 2019 report, and I'll put this report in the chat, found that Humphreys County, Mississippi, a majority African-American county with more than a third of its residents living below the poverty line, was the most heavily audited county in the country. The rest of the data paints a pattern showing IRS audits hitting disproportionately in the rural South. And once I put the link there, you can click and see the map. And sure enough, there's a bright red streak across the rural South of the most disproportionately targeted counties for IRS enforcement. Now, presumably, these are the people that Ready Return and e-file would be intended to help. But this data forces us to step back and ask the question, if such programs would actually make them easier targets for IRS enforcement. So this is all to say, at best, this conversation about expanding the roles and responsibilities of the IRS feels incredibly premature. And I certainly echo all of my fellow panelists in strongly supporting a simplification of the tax code before we talk about making the IRS's job more complicated. And with that, I'm looking forward to getting to Q&A.
Well, what do you think is there's a couple questions from Sarah. She asked some really good questions. What do you think is the biggest challenge facing the next generation of taxpayers, and really how is technology going to interact with taxpayers? What when you think of IRS technology, what comes to mind? Is that so?
Well, yeah, first of all, I obviously am not a part of the younger generation, but I do have a 20-year-old, and I've got a pretty good understanding that it's likely there's a substantial gap between the technology capacity of the IRS and my son's use of Instagram and TikTok. So that said, I mean, one of the things that we recommended in '98, remember '98, that's pre-Google. So we did recommend that the Congress changed the law to put incentives in there for electronic filing, and it actually worked. That was a risky thing to do at the time because it was almost all paper at the time. And it's well over 90% now that's electronic filing. So I only say it because it oftentimes is difficult for us to identify areas where we've had success. On the other hand, among the things that failed, not because of Congress, the administration was worried about Treasury losing power, and we recommended the creation of a board of directors for the Internal Revenue Service. I still think that's necessary. That can analyze this technological question, can look at leaks that occur, can make recommendations about the budget, can actually identify areas where there are taxpayer problems. Because if you're a member of Congress, I mean, one of the things that happened in '98 was lots of people came forward and said the IRS is harassing us. Okay, so there were some legitimate, but the reason we created a taxpayer advocate, there were some legitimate issues where taxpayers were getting harassed by the IRS, but on a number of occasions, after we did the investigation, the IRS was doing the right thing. The taxpayer just didn't like it. I'm sure Al Capone didn't like it either when the IRS sent him to prison for not paying his taxes. They couldn't get him for running drugs, prostitution, or gambling. So it's very difficult for a member of Congress to respond to those sorts of things because you don't have the time to sort it all out, but it's hard to separate a legitimate case where a taxpayer is being harassed from an illegitimate case where a taxpayer simply doesn't like the IRS trying to collect a legitimate bill. And I think it's going to be very difficult. I don't see a lot of evidence where modernization of government-run ET systems has worked out where we've gotten something better than what we had previously. It's hard to do in the private sector. But you think of the IRS, when you think about the IRS relative to the private sector, you have to think of it as they've got 535 elected people on their board. That's the orientation that enables you to understand the challenges that the IRS has. So I think there's a real problem with technology. And I completely agree with what Patrick said. Just because you don't like wealthy people, you shouldn't celebrate the fact that somebody leaked out their tax returns. Because what that says is you could be next. They could leak out yours next. We depend upon the IRS protecting that data. So anyway, I think there's a need to get some kind of oversight board, a strong oversight board that Congress can confirm, but it's got to be sufficiently independent of the administration so that it can actually examine each one of these problems that we've been identifying on a regular basis and recommend to the Congress what needs to be done.
I'd like to jump in and say there's a couple of things that come to mind here. One problem that next-gen taxpayers are going to face, and I think we face today, is the increasing digitization of our economy. My kids and my soon-to-be grandkids are going to do everything on their phones. They're not going to expect to get bank statements or anything else anywhere than on their mobile devices, and they'll expect the information to be increasingly easily accessible to them. Today, you can't do your taxes on your phone if you wanted to.
you're presuming, Tony, that we're going to be using phones 10 years from now, that it won't be embedded in our corneas or something.
Well, some form of digital technology, but the point is the information is just not easily accessible today, even if you wanted it to be. And then the second thing, this is internal to the IRS, but when you realize that the data structures in the IRS are entirely forms based today, based on this paper construct, and that's the data structure that the IRS is working with today, versus more modern data structures that would give you a lot more flexibility to do things. And all of that underlying technology is still based on these paper forms. That's a fundamental change that has to be made. It's one of those infrastructure, creaky things that I was talking about.
Yeah.
You have to rethink about, how you think about data and so on if you're ever going to make any progress.
Pinar,
two examples.
You're leaning forward, Pinar. You want to respond?
I'm going to take another point of view, and I think the problem probably that future generation will face is the lack of knowledge about the taxes. Older generation, I think, was lucky enough to have those W-2s coming your way, and your filing taxes were, comparatively simple. But the current generation is doing so many things with like the rideshare apps or online platform sales, so they generate income from those things. But I don't think that majority of them know. One, they have to pay taxes on those things. Two, how do they have to proceed to pay those taxes? So I think there is a significant amount of work and education work that needs to be done from IRS to educate that new generation about what they need to do. And on top of it, as Tony said, they're looking so I know from my teaching experience, they love everything to be ready in front of them. So access to data in one place probably will simplify their job. But these are all issues that we need to consider for the next generation. But education becomes, I think, the first thing.
Well, I mean, you're suggesting it, but you be more explicit. If I fail to file a 1099, I'm guilty of violating the law, right? So, for that, if it's true, which is probably the case, that is going to be lower income, moderate income individuals that are much more vulnerable to an audit. There's significant. To Patrick's case, there's significant law enforcement risk if we don't educate people that are getting their income from the gig economy and having to file and not perhaps filing their 1099.
And think about this. I mean, everyone thinks that if they're not receiving any kind of a 1099K from the companies because the threshold is 600, they think that they don't have to report the income. But if you're working for 3 different platforms, that income, will be significant. I mean, might be significant.
Yeah.
And if you're not paying taxes on those, yes, you're risking audit, but at the same time, you're also hurting the system because you're not, paying the necessary taxes, especially on the employment taxes. That might hurt everyone currently and in the future generation because that's decreasing their salary, their retirements in the future.
Well, Cori and Patrick, can you comment on this? Because you both are, particularly Cori, there's a number of things in your polling data that suggests the need for education. Did I read that wrong, or does your polling data suggest that what Pinar is talking about is exactly right, that we need to make certain that education occurs? Otherwise, taxpayers are going to find themselves, and I'll pass it out after you comment to Patrick, some pretty serious law enforcement problems.
I think you're both right. I think education is a very important part of it. I mean, if you look at how people file their taxes, you sort of have a couple of different options. Is it a private company? Is it something you're doing on your own? Is it a family or friend? But the number of folks who do it on their own is quite low. And I think it's by nature of the complexity or perceived complexity, whichever one is right, of the tax filing system. And I actually noticed in the Q&A there's a question about the IRS communicating with the taxpayer, particularly on the ready return, about what's included and what's not, and how that could leave behind or unclaimed millions of dollars in tax benefits. And So I agree. I think the education component of it is extraordinarily important. And, as Patrick said, I don't think anyone disagrees with a simplification, but a simplification doesn't necessarily mean, ready return or return free system. So Patrick, I'll hand it over to you.
Yeah, certainly. I mean, I'd echo almost everything that's been said so far. I think education, I mean, it's such a black box at this point. I mean, even if you attempt to do taxes yourself, if you look at the forms that you get, they're so cumbersome that folks immediately resort to turning to, a private system. And sometimes those private system comes with fees. And so if you were just to create an e-file system, right, without any sort of proper education there, you're gonna naturally attract people that are looking for a lower cost option, but then you might just drag them into greater complexity and in an attempt to kind of get around that complexity, but also avoid the law enforcement side of it. You see people that probably are going to be leaving money on the table that they're owed, right? Are they really keeping every receipt? Are they, are they applying for every deduction that they're owed? Or are they just going to, say, click through sort of like the terms and conditions of any major website that anybody uses? Like, who's actually reading that? Who do you actually know what you're signing up for? You just want to get the process over with. And so I worry about something like that happening if you create particularly just with an e-file system where you've got the IRS trying to create its own version of like a turbo tax. But I don't see to answer like another question that we see in the panel here, I don't see a whole lot of incentive based on how the IRS is structured right now for them to hold your hand and walk you through every deduction in the way that a lot of the private systems do. And I mean, I file my taxes with TurboTax, and my experience is they doubled and triple check. They say, are you sure? Have you taken another look at this? And can we count on that being built into the IRS's system? What are the incentives within the IRS, right? Because this is an organization that has bosses and employees. What are the structures for performance evaluation at the IRS? Because based on the data that I see in terms of audits and where the audits are falling, it seems like enforcement is targeting low-hanging fruit because they know these are the people that have a hard time fighting back. And I would hate to see that same sort of incentive structure applied on the e-file side, where you've got, again, you're going to be measuring the performance of the system by how much revenue it raises, especially when you have, and as Senator Portman said, a major focus in Washington right now on closing the tax gap. So if the IRS's performance is being measured by closing the tax gap, I don't see them having a much of an incentive to try and ensure that every taxpayer is getting every dollar back they're owed.
Well, I also think that there's something to be said for the inequity that a system like this could generate. If any of us here on this panel were to receive a ready return from the IRS and we thought there was something wrong with it, we would turn to a taxpayer, would turn to an account, and we would have that financial ability to do that and to sort of fight and make the adjustments that we thought were necessary. But when you're looking at, busy parents, middle, low income individuals, there's a significant break in their financial resources and their time resources and inclination to push back on the federal government and to feel comfortable doing that. So I think, that's something worth considering as well.
Oh, and we also have to look at the history, where this has been tried in Michigan and California and so on. And it's largely not been a popular, uptake in terms of the number of people taking advantage of it. So I think it says something about the psyche of the American taxpayer in terms of, wanting the government to actually provide this kind of service.
And one final short point on this is that I'm not sure of the exact qualifications, but a lot of services the private sector already offers for a lot of folks, low-income folks particularly, that have simple taxes. They'll offer to file for free if you don't have a complicated tax structure. If you're just getting the standard deduction, that's either like super low cost or free. So it's like, what is the federal government's role in trying to supplant that at this point? I mean, I don't see the market failure that would warrant the government getting involved here.
Touching back on what Tony was saying, I think the American psyche has a very interesting split in the research that we have found, and that is, people are so willing to hand over information on social media platforms through sharing their pictures and all this personal information. But when it comes to their comfort level with the federal government accessing all sorts of information that they would need in order to do this, how does the federal government going to compile the information? Did you have a child this year? Did you get a divorce this year? Did you buy a home this year? Were you did you have a dependent, parent who you were taking care of? All of these different components. There's a real dividing line on what Americans are comfortable with sharing proactively on their own, and not so voluntarily on the other side, particularly when it comes to the government.
Yeah, I'll make one more time the point for this IRS oversight board that we have. It's actually in the law, and maybe Congress after the fact struck it from the law, but it was in the law. And again, for the audience, the resistance to appointing highly qualified people, because the administration didn't at the time. It was the Clinton administration. They didn't appoint them, and they were afraid they were going to lose power. Treasury did not want to give up power to a civilian oversight board that could come in and say, you're not managing the IRS correctly. And I personally think for a whole range of topics here, whether it's getting the IT right, resolving these issues of how to make it easier for the taxpayers to pay, how to educate them so that they understand if they're getting their income some way other than through a W-2, they have to be careful. I think there's so many things that are, one of those issues where if you do it the wrong way, you'll make things worse, as opposed to, this should be relatively simple. This is a very big country with 300 million taxpayers, and I think it's an exceptionally important part of our government. And Cori, your polling data alarms me. I look at that polling data and said, if we cross over to the American people saying we no longer have confidence that our tax system is fair, that the collection is fair, we get a problem. A serious problem.
One of the other things that's been overlooked is the intersection between federal and state. So there are a lot of states that have
that's correct
taxes as well that are dependent on the federal system. And so let's assume for a second that you could spend some number of billions of dollars. There was a question about how much it would cost to do this, and that you could somehow accomplish this on top of all the other priorities at the in terms of modernization and so on. And I believe it would have to be above and beyond in the billions above current appropriation levels. But that still doesn't take into account what it would then take to enable the states and everybody else to make tax simplification even simpler. So I think any way you look at it, you're looking at a really huge cost, and for something that probably isn't going to be perceived as a real benefit by most taxpayers.
Tony, I just got a 5-minute warning. Does that suffice for your closing comment so I can go to the other panelists, or do you have anything else you'd like to say?
You bet.
Okay. So Cori, do you have anything that you'd like to say in closing?
Sure. I mean, I don't know that we even scratched the surface at this point. This is such a huge and complex issue, and I wish it was easy enough for us to solve in this hour.
Yeah.
But thank you to you, Senator Tony, Patrick, Pinar, and CPPI for giving the opportunity to folks to learn and us to discuss all the different things that are happening as we move forward, whether it's with the IRS generally or more specific proposals. There's a lot to be taken into consideration.
Pinar, do you have any closing comments?
Sure. As an economist, I always think about the cost benefit, and as a final words, I think it's great that IRS got this additional funding, but I think it's important to figure out where to channel those funds in a most efficient way and how to get the low-hanging fruit rather than creating another system that will burden the whole administration further. I think it's important that we factor in cost benefit analysis when we are making significant changes.
Patrick?
Yeah, I think an example that will work for the beltway types, and I'm just reminded of this as I sit here and I can hear the metro going by my condo, and it's that the metro got a bunch of resources, and instead of investing in the core service, which has been deteriorating over the years, they tried to attract new passengers by expanding the system, adding lots of bells and whistles, chargers at stations, things like that, making everything look clean and fancy and new features. And that's fallen on its face. And I think a lot of the problems at the IRS are similar, right? We're talking about creating new systems and new structures to try and solve problems that the resources that are being allocated for those new structures could be used to solve. So let's focus on the core of the system as it is. And if we can tighten up those issues, right, dedicate resources to the existing customer service lines and things like that, we might not need to add any of these bells and whistles in the future, and the confidence of the IRS will be restored.
Well, I'm going to thank the panelists as well. I really appreciate the comments. And Cori, to your metaphor, I think unfortunately we did scratch the surface, and as a consequence, I'd love to be able to sustain this conversation going forward. So, Chris, I'll turn it back over to you to wrap this up.
Wow, well, fantastic job, Bob, and all of our panelists. You guys, you did. We have a whole bunch of questions in the Q&A that we didn't get to, and I apologize to all of our attendees. I think we have seeded the grounds for some more discussion going forward, and look forward to being a part of that with you all. To our panelists, thank you. To our audience, thank you. It's been a great program, and stay tuned.
Tell the audience, Chris, that you're wearing jeans.
Yeah, I'm cleaned up from the waist up here. But we look forward to doing more programs like this, and you'll be receiving a survey when you log off. Please take a moment to fill that out. That will help determine what's next for CPPI. And this recording, this event will be available on recording on our CPPI YouTube channel, and we'll make sure we share a link to all of that. And again, thank you, and everybody have a great day.